Welcome to the Coronation Life Assurance Limited webinar titled Retire with Ease, Decoding the Perks of Annuity Plans for a Simple Future. The purpose of this webinar is to empower and educate individuals nearing retirement about information that they need to be able to make informed decisions as regards their retirement planning and to be able to make good decisions for peace of mind and their financial stability. Trust that it's going to be a very interesting conversation. I'm saying conversation because it's going to be engaging. You'll be listening, gaining all the knowledge that you need, and you'll be conversing in the chat box as well. So please, I'm looking forward to you engaging in the chat box. I'm excited about the lineup of speakers that we have. These are stellar professionals who have the required experience and knowledge, to be able to have this conversation today. And a big thumbs up and well done to Coronation Life Assurance Limited for putting this together. And I trust that we will not leave this webinar the same way that we came. All right, ladies and gentlemen, thank you for joining us. If you're here and you're excited about this webinar, please let's go to the chat box and give Coronation Life Assurance Limited a thumbs up. I'll get used to that. My name is Victory Wilson, and I'll be the host for this webinar this morning. Before we kick off, would like to take a welcome address from the MD, Coronation Life Assurance Limited, Mr. Adebowale Adeshono. If you've gotten used to the chat box, please go to the chat box and just give a thumbs up or applause. I look forward to seeing your applause in the chat box. While we do that, please welcome Mr. Adebowale Adeshono for his welcome remarks. Mr. Adebowale, you have the floor.
Thank you very much. Thank you very much, Victory, and good afternoon, our esteemed guests. It's my pleasure to welcome everyone to today's webinar, themed Retire with Ease, Decoding the Perks of Annuity Plans for a Simple Future. I am Adebowale Adeshono. I'm the MD CEO of Coronation Life Assurance Limited, and I'm very much delighted to have all of us join this call for this significant event. At Coronation Life Assurance, we understand that approaching retirement can be daunting. It's filled with questions and uncertainties about financial stability and, of course, your future security. And this is why we've set up today's session, which is extremely crucial. Our goal today is to demystify annuity plans and to illustrate how they can serve as a reliable cornerstone for a retirement strategy, ensuring your peace of mind and your financial resilience. This webinar today is part of our ongoing thought leadership initiatives. It is designed to provide valuable insights and practical knowledge to our clients. Whether you're a professional nearing retirement or you're already enjoying your post-work years, we believe that understanding the benefits and nuances of annuity plans is essential for making informed decisions about your financial future. Today, we have a panel of seasoned professionals cutting across actuaries, annuity sales experts, and annuity administrators who will help us thoroughly explore the topic. We also have our moderator, Victory Wilson, who is a multi-award-winning broadcast journalist who will be guiding us through these insightful discussions today. I encourage everyone on the call today to actively participate. I encourage you to ask questions and make the most of the insights that will be shared today. Together, we will explore how annuity plans can provide a dependable financial safety net, allowing you to face the future with confidence and ease. Once again, I want to say a very big thank you to everyone for joining us, and I hope you find this session both informative and inspiring. Let us begin this journey towards securing a stable and fulfilled retirement for all of us. Thank you very much.
Thank you so much, Mr. Adebowale. Thank you so much for that warm welcome and introduction of everyone on the panel and myself as well. Thank you very much, sir. All right. So I told you earlier that you would definitely not leave the webinar the same way you came, because apart from the knowledge you'll be gaining, We'll also be delving into the protection solutions offered by Coronation Life Assurance and why you should key into getting an annuity plan. Once again, my name is Victory Wilson. I'm a broadcast journalist and an events compere, and I'm excited to be here. And I told you particularly, I'm excited about discussing the misconceptions people have about annuity plan. Get us to gain more knowledge as well that will help in making an informed decision. The state of Nigeria now is very, very important that we make good financial decisions so that we can have peace of mind, especially when it comes to retirement. All right, we're going to move on to the keynote presentation. Everything that I've said does not even cover everything about the reason why we are here today. So we'll be taking the keynote presentation by Mrs. Yeside Kazeem. Mrs. Yeside Kazeem is the immediate past president, Nigerian Actuarial Society, non-executive director. And Mrs. Yeside is a highly qualified actuary and a fellow of both the Nigerian Actuarial Society and the Institute and Faculty of Actuaries. She's the immediate past president of NAS, like I said earlier, and serves as a co-vice chair of the Africa Subcommittee of the International Actuarials Association. With extensive experience in the insurance and actuarial fields across Africa and Europe, Yeside currently consults within these sectors. Her career includes also significant actuarial roles at Old Mutual Nigeria and Deloitte UK, where she gained experience in pensions, investments, and life assurance. Ladies and gentlemen, I can go on and on and on, but you can see the major reason why we have this stellar speaker with us. Please give a round of applause in the chat box for Mrs. Yeside Kazeem. I want to see your applause, please. A round of applause for Mrs. Yeside Kazeem as she takes her keynote presentation.
Good morning, everybody.
Good morning.
Victory, you can hear me, I can guess?
I can hear you loud and clear.
Can you see my slides, or at least my screen?
Yes, we can see your screen very clearly. Just expand it a bit.
Expand it? Then you're not seeing the right thing. Let me stop sharing and try again. Can you see a full screen?
Yes, we can. You can go on.
Okay, fantastic.
It's perfect now. It's perfect now.
Fantastic. Hello, everybody. Welcome to this session. It's great to have you all here. I'm excited to see the numbers growing as the webinar has gone along. I'm giving the keynote, but I'll talk about what I'm going to talk about. Please do put questions in the chat box. I think it's important, or the Q&A. I think it's important that we make this a little bit interactive. If there's anything I'm saying that you don't understand, please do put the questions in and we'll come back to pick it up. So I'm going to go through a deck. I've got 30 minutes. I don't think I'm going to use it all, or maybe I might go too much. I'm going to start off with talking about the retirement age. I'm going to define what an annuity is. I'm going to talk about types of annuity, the benefits and features of an annuity. Then I'm going to bring it back to what's happening in Nigeria. What does the Pension Act say about annuities? Because typically that's what we find in the market. Then I'm going to do a comparison between the annuities, what you get from an annuity and what you get from income drawdown in Nigeria. I'm going to talk about it as part of financial planning, because I think that's kind of important that we all start thinking about our future now. Then I'm going to talk about what impact, I'm going to spend last slide talking about the impact that the annuity market as a whole has on the Nigerian economy. Because I think it's important that we don't think about things in isolation, because I think everything is a little bit of an enabler as we go along. Okay, I'll whisk through, because I'm always excited about questions, and talk about things. So the retirement age in Nigeria, there isn't really one retirement age in Nigeria. If you're in the public sector, it says you can retire after your age 60 or 35 years of continuous service. That's one definition. But even within the public sector, there are exceptions to that general age 60 or 35 years of service. A couple of the exemptions are judicial officers, 70 years, If you are an academic staff of a university, you retire at age 65. If you are a professor, you can ask for retirement to be at age 70. If you're in the private sector, it's not defined. It's whatever your company says it should be. It's in between age, typically between 55 and 65, but companies tend to define what that is. Now, I talked about the Pensions Act 2014 because a lot of what's happening in the retirement space has come from that legislation, and it's quite impactful on what we're talking about today. But the Pension Act in and of itself also does not prescribe a retirement age, but it talks about people having access to retirement benefits from age 50 or attaining their own specified retirement age. So I think the moral of the story here is there really isn't a retirement age unless you're in the public sector, and those have been defined. Now, I want to talk about an annuity, and I'm going to put this up here, and then I'm going to delve into it. So this says it's a financial product that pays out a predetermined stream of payments to an individual, typically used as an income stream for retirees. It's a contract between you and the insurance company where you make a lump sum payment or a series of payments, and in return, you receive regular disbursements beginning either immediately at some point in time in the future. So first thing I want to focus on is financial products. This involves money going both ways. So I think that's important for us to realize. And that's why it's called a financial product. It pays out a predetermined stream of payments. So basically, when you buy this product, you're going to decide what sort of payments do you want. Do you want it to be 100,000 per month? Do you want it to be do you want it to be increasing? Those are things that you must decide when you buy this product. Okay. It's important, again, if we look at this definition, to say it's a contract. So it's an agreement between you as an individual and an insurance company. And it's important to think about it as a contract because when you have the rights that come along with a contract, so it's enforceable. If you buy this contract with an insurance company, then if anything goes wrong, you can resort to the courts or things like that to say it's not been done properly, or they have not fulfilled the terms of my contract. And the way the contract works is you need to look at your policy document. You need to read that, because if there's a, I don't know if people have done contract, but that's important. It's what sets out the terms in which you have come together to agree to do business together. So it's important you think about it as a contract. Then I put this bottom pre-retirement phase. How do you pay for this contract? You can either pay in one go, or you can pay in a series of payments over a period of time. Okay? And I call that the pre-retirement phase. In return for that, you'll get some payments coming back to you. They might come to you, so you might say, I'm going to give my insurance company some money in 2014, and I'm not retiring until 10 years later, so start paying me from 2015. Or I'm going to give them some money now, and I want to retire 2014, and I want to retire in 5 years' time. Or you give them some money now and say, from today, when you collect my money, from next month, start giving me money back. And that's the disbursement phase. And we'll talk a little bit more about that throughout the period so that you get used to what this means. So here I'm going to talk through, I put them all on the slide, but I'll talk through them one at a time. What are the various types of annuities that are possible? Now, this is not relating to the market. I want you guys to understand the sphere, first of all, of what are possible for an annuity. So a life annuity says the insurance company will pay you a regular income for as long as you live. If you start at age 60, you get to age 70, they'll pay. If you go to age 80, they'll pay. If you happen to have really good genes and you get up to 100, the insurance company has to pay. The insurance company cannot say, you are living too long. That's not the contract. The contract is they will pay you as long as you are alive. That's one type of annuity. Another type is a joint life annuity. and saying you will receive a regular income as long as both of you, and it's typically done you and your spouse, to say you will continue to get income as long as both of you are alive. So even though one person passes on, the other person will continue to receive an income. The third type is a life annuity, but that's guaranteed for a period of time. The period could be 5 years, 10 years, 15 years. And typically what your contract with the insurance company is saying is that I will take out an annuity, and whether or not I'm alive for the first 10 years, I'll use 10 as an example because that's important later on, you will pay some money out for the first 10 years, irrespective of when I'm alive, whether or not I'm alive. So I'll give you a few examples. So say I take out a retirement policy when I'm age 65. Years, 2 years, and that means there's 8 years that my nominee of a beneficiary I have mentioned to the insurance company will continue to pay premiums to the person. And I think that's important. That's one option. You can also have, as I said, the payment starts is important. So you can have an immediate annuity in which the payment starts immediately you have the contract. Or you can have, which is the final definition, a deferred annuity, where you say, I want payments to happen after 5 years. I'm going to give you the money now. I'm going to give you the premium now, but you are going to start paying me an amount after 5 years. We'll determine what that amount is now. So I think there are various ways. How long the insurance company is going to pay for, who the insurance company is going to pay, whether it's guaranteed, whether it starts immediately. When you're looking at an annuity, those are the important things that you need to think about. Okay, what are the benefits? If you take a life annuity, it's fixed income for life. I think all of them are fixed for life, to be honest. There is no risk that you are going to outlive your savings because you have contracted with somebody who says he will pay you for life. It means that if you happen to have good genes in your family, very great genes, and you tend to live long, then you might end up getting more money paid from the insurance company than you put in. It's one option. And then finally, you have a lot of scenarios in which you can choose what suits you. You can choose how much money you want to get as an income. You can choose when you want to get that money and how frequently you want to get it. And so if we look at it from a features point of view, as an investment, it means that I've said to myself, I don't want to worry about whether the stock market is doing well. I don't want to worry about whether T-bills are doing very well. I just want the insurance company to take on that risk and then take that risk on and pay me an amount. All I want is my 100,000 a month. All I want is my 200,000 a month, whatever it is. I can afford that now. So the insurance company takes on the risk. Okay. We've talked about financial security for life. It means for as long as you are living, you will have this amount of money being paid to you. So you will always have, you would have set it up from the start to say, this is how much I need to live. Okay. Then there's some flexibility. Flexibility during payment to say, I want my income to be monthly, quarterly, half yearly, or give me my money every year. You can determine when you're setting up your contract, how often you are paid. So it's like and what you find is some people go to monthly because they're used to receiving monthly as a salary. So by the time they get to retirement, they kind of want that regular income. So they know this is what is coming in. Some people prefer quarterly and half yearly. It depends on how you've set up yourself for retirement. There's also some flexibility around how you build up the funds. Like I said earlier, the funds you pay to your insurance company, you can pay that either yearly, half yearly, or monthly. So it's up to you what you do at that point in time. Okay? And so if we go on and talk about the Pensions Act, The Pensions Act is what defines the relationship in Nigeria. So it sets up the contributory scheme, and it allows the buildup of payments to be done regularly. So employers and employee set up to build the fund for the post-retirement period. Now, in the post-retirement phase, you can purchase an annuity, you can do program withdrawals, but effectively, this is the government setting up a model in which to ensure that people, once they stop working, still have a source of income. Finally, it talks about the features of the annuity, and the government has said when you buy an annuity, it must be guaranteed for the first 10 years. So that's important. Now, I'll talk to you a little bit about the annuity and the income drawdown. So this is just a comparison of the two different approaches. On the annuity, it's an income guaranteed for life. It provides financial flexibility and stability. You're not taking the investment risk. And that can be two ways. It depends on how much of a risk appetite you as an individual have. Some people are more risky, take more risk than others. But also it means that when you take the risk, you know that there's an upside, there's a downside. How well prepared are you for the downside? You can have predetermined increases, because also when you buy an annuity, some annuity products can say it would increase with inflation or it will increase by a fixed amount. You can discuss all that with your annuity provider. But once it starts, there's no flexibility, because once you've agreed this is the payments that will happen, you can't change it. On the other hand, income withdrawal in Nigeria is done by the PFAs. It's flexible. You can determine how much you want, how much money you want to take out and when. Although there are small rules around that, you can determine what it is. If you have a large expense, you need to exposed to investment risk. So if you are heavily in equities and equity markets comes down, then it means that your fund is now smaller and the amount you can use, you can take out becomes smaller. There's also the little bit of a possibility that you might run out of funds before you pass on, because it's not guaranteed. You can either run out of funds because you've taken too much too quickly, or your investment returns have not happened as you had anticipated. So it's possible to do that. Now, if you want to use an annuity as part of your financial planning, I'd like to think about it in two phases. I like to think about it as part of your pre-retirement. So what happens before you even get to retirement? And I think in terms of financial planning, the earlier you start, the better it is. So factors that impact on how much money you're going to give the insurance company is important for us to think about. And we'll discuss some of the, so you can say, oh, I need 10 million now. Do you have 10 million now, or do you want to build up to 10 million? Or you say to yourself, I want an income of 1 million naira a year in retirement. How are you going to get the money? You need to start early. And that's where you start thinking about, when are you going to start saving? When are you going to retire? How much money are you going to put aside? Not the government has talked about the percentages that are important, but are you doing more on top of it? What are the investment returns that you can achieve? Because the better it is, the more money you have aside. And then bulk payments. Now, in the post-retirement or the disbursement phase, are you looking for a fixed income? Are you going to want your income to increase with inflation? What's your risk appetite? That's important. Are you willing to take on the fact that you might live long as a risk? Are you willing to take on investment risk? Those are things for you to really sit down and think about it. And when you think about it, it's important that you think about it both from the upside as well as the downside. Also think about how often you want to be paid. Do you want to be paid monthly, quarterly, annually? We've discussed this, because that's important in determining what your lifestyle will be later on. I'll go into a little bit more detail in this graphs. And in this graphs, what I'm trying to say to you is the choice, I'll talk first on the impact of the retirement age. If we look at a base and say your base is 60, right? And you want to retire 10 years earlier, it means that you are going to be able to save less. I'm looking at a 40-year-old who is trying to build up money to retirement. If he retires at age 60, he'll have about 4 million. If he retires at age 70, he'll have just over 10 million. But if he decides to retire at age 50, then he'll have less than 2 million. You can see that the amount he's going to have in retirement is also a function of how well he saves. Now, how quickly he starts saving is also important. If he's going to achieve, if he wants to retire at age 60, if he starts saving at age 40, then he'll only have 4 million. If he starts saving at age 30, he'll have about 11 million, just over 10 million. If he starts saving at age 50 or under 2 million, this is saying that the earlier you start saving, the more money you can have. Note, in all these examples, they are saving exactly the same amount every month. The longer you save, the more money you have. And note, it's massively different. See the difference between what an extra 10 years of saving from 4 all the way up to 10. That's more than double. The investment return is also important, right? So if you're on a 10% investment return, you'll have about 4 million. If it's 15, just under 10. If it's 5, just under 2. So the investment return will play a part in how your funds grow. But you can't really control that. You can control when you start saving. You can also control how much you save. So in this example, our base is 50K per month, and he's getting 4 million. If he saves 100K, he's going to get 8 million. If he starts saving 25K, he's already going to get 2 million. So obviously, what I'm trying to highlight here is your financial planning needs to start early for your retirement, because being able to build up that sum that you use to exchange with the insurance company is going to impact how well you live. And no amount is too small, is the moral of the story to start saving. No amount is too small, because by the time you think about interest and everything, it then adds up together. Now, that's pre-retirement. At the disbursement phase, you need to think about, are you going to hand over to the insurance company? Because investments might work in your favor sometimes. And are you able to lock in a good rate? If rates are high, you lock it in knowing that rates might come down. If rates come down, it's the insurance company that takes the risk at that point in time. So do you want to do a deferred income? So I think the market is really good now. I'm going to give you my money now, but don't start paying me for another 5 years. I want 100,000, 2 million, whatever you want in retirement, you have that conversation. It's going to be guaranteed for 10 years. Is it inflation linked, or are you going to have fixed increases? For example, you might say, I want to have 10% increase, 5% increase in my annuity every year. It just means that you will start off on a lower amount. There's no, you will say, I can afford more. I want to inflation protect myself later on. Now, my last slide here, I talk about a little bit about the impact of annuity on the Nigerian economy. I think it's important. So annuity market is really big. In the life sector, on the life, so those who have taken annuities with the life insurance are almost about 500 billion naira worth of it. Is what in 2020 was about 460 million. Those was the size of the annuity market in Nigeria, which means that as an insurance company, we need to invest this money. And that means that we need to invest them in long-term projects, because we have long-term commitments. And that means that all the long-term projects that are needed in Nigeria, we're able to invest in them. And they're able to do that. And that's what you find in other economies. Pension funds, assets, and annuity assets are used to fund long-term projects. So this allows the economy to grow, because I'm saying I'm putting money away, I don't need it for another 10 years. It means that you can put it in an infrastructure. It takes 10 years for them to return the money. The investment market is going to deepen because the annuities tend to need a lot of different annuities for all the different investments for all the duration. And the deeper the investment market is, the easier it is for you to raise funds, the easier for you to trade, the lower the cost of funds is for everybody. Long-term planning. So say, for instance, what we've seen in other places, it's kind of used for infrastructure finance. So say I want to build a bridge, or I want to do something, it's going to take a while for the money to come back. Then I can do long-term planning because I have long-term funds. And then last and not the least, social security. The more we have planned for our retirement, the less of a burden we are. The less of a burden we are on, I know generally in Nigeria, we tend to think about our children as our retirement plan. But what happens as if your children have children? So are your children going to be supporting their own children and you as well? And I think it's better for you to be a little bit independent, or a lot independent, in my opinion, to say, I've got my own money. You go take care of yourself. I did this earlier on for me. I thought about how I wanted to live in my retirement age, and I sorted that out. So with those little bits of words, I think this is my intro into the annuity space, into what's happening in the country, and look forward to taking a lot of your questions.
Thank you so much, Mrs. Yeside, for that beautiful welcome remark. It was great. It was a great and insightful. I'm sure that people that do not have any knowledge of annuity and annuity plans and now have a great insight as to what annuity is and what annuity plans are and why it is important for you to start saving now. All right, before we go further, I told you earlier that we have an amazing lineup of speakers. They are stellar speakers, and this panel is going to be loaded. So I'll be doing the introduction of our panelists right now. I've seen some questions in the chat box, but I want to say, ladies and gentlemen, if you have questions, please drop your questions in the Q&A box. The chat box is just for applause and other comments, compliments. But if you have questions, please use the Q&A box. All right. Now we've just heard from Mrs. Yeside Kazim. She gave us a beautiful keynote presentation and opened our horizons, broadened our horizons to annuity and annuity plans. And now we'll be hearing from our other speakers, but I want to do an introduction. I would like you to please appreciate them as I introduce them one after the other in the chat box. Give them a round of applause once I'm done with their introduction, okay? Our first panelist is Mr. Ajibola Sylvester, who is the former General Manager, Superannuation and Investments in Nigerian Ports Authority. Thank you so much, Mr. Ajibola, for joining us.
Thank you very much.
Please give Mr. Ajibola a round of applause in the chat box, ladies and gentlemen. Let's appreciate him. Thank you. I'm waiting to see your applause, please. All right, our next panelist, thank you. Our next panelist is Mr. Larry Jagulano, who is the Senior Manager, Actuarial and Analytics, African Reinsurance Corporation. Thank you so much, Mr. Larry, for joining us.
Yeah, thank you for having me.
Mr. Larry, we would like to see you.
Yeah, unfortunately, I think I'm having a small IT challenge. Yeah.
Oh, okay.
But
Please, let's appreciate Mr.
will...
Larry. Thank you for joining us despite the technical hitch. We hope that you're able to sort that out so that we can see your face.
Yeah.
Thank you. Our next panelist is Mr. Wemimo Akinbishose. All right, who is the team lead annuity sales, Coronation Life Assurance Limited. Thank you so much, Mr. Wemimo, for joining us.
Thank you.
Let's give a round of applause for Mr. Wemimo and all our panelists. All right, so everything that Mrs. Yeside said, I paid attention because it's very, very important. And I would like us to start with the basics. Let's take off from where Mrs. Yeside stopped. And the first question will be tied to one question that was also dropped in the chat box. That's why I'm saying people should actually drop their question in the Q&A box. But that question is very important because it's still addressing some beliefs and knowledge that people have of annuity plans. And I would like Mr. Larry to actually answer this question, but it's just so unfortunate that we can't see you. Can you help sort that out? Okay, but Mr. Larry, can you hear me?
Yes, I can hear you. Thank you.
Okay, so that question is as regards retirement annuities and the conception that people have. People think that there's a similarity between the pensions and annuity. Can you please shed more light on the differences between pension schemes and annuity plans?
Okay, thank
And
you.
if there are any similarities, please let us know.
Yeah, so thank you very much. So basically, pension is like a way of, preparing or, providing for retirement. So, so it's like the umbrella word that is used to describe, how you prepare and plan for retirement. Okay, annuity is just one of such methods. So annuity is part of pensions, right? So pension is the more, bigger word, while annuity is one way of providing that. So basically, there are many ways, but I'll zero in on about 3 of them. So you have annuity of, to be more specific, life annuity. You also have lump sum, or what some people, most people would know as gratuity. Then you also have, program withdrawal, which, is also a form of income. All right, so we can try to look at, how, annuity compared to each of these other 2 ways of providing for retirement. First is, as yesterday mentioned in the opening remark, annuity is, a regular income. So you're provided with a regular income and also at regular interval. So this regular interval could be, quarterly, it could be monthly, it could be annually. Really, in theory, it could be any frequency that you so choose, but usually it will be in line with how you be earning income before retirement, so that usually we don't want to distort what you are used to, right?
Yes.
For the compared to the lump sum, this will usually be a one-off payment. So you receive the one-off payment, and that is it. You will want to agree with me that one of the problem with that is when you have a lump sum payment at once, sometimes you want to spend this money, right? Maybe get a new car, buy a new house, and then before you know it, a few years down the line, the whole fund is wasted. Sometimes you put it to good use, you set up a totally new business, but because you don't have experience in that business actually drains your income, the lump sum you invested. And so that's one of the drawback of using a lump sum. For a program withdrawal, it's also a regular income at regular interval.
Larry, thank you so much. I think we're just even circling back on all that Mrs. Yeside has said, and I like that your first few sentences already explained the differences between pension schemes and annuity plans. Thank you so much. Mr. Sylvester, being that you were former general manager at the Nigerian Ports Authority and you've had like real life experiences with people. So when we talk about misconceptions and the beliefs people have, when they talk about annuity plans, you can give a first-hand, explanation of that. But I would like you to explain, to help people understand better the role that retirement annuities play in the broader context of, social security initiatives in Nigeria. I can narrow it down to why it is important for people to actually have annuity plans and to plan ahead of their retirement.
So, good afternoon, everybody. I need to give a clear perspective because social security in Nigeria refers to a system of social welfare and insurance program designed to provide financial assistance and support to citizens in need. In Nigeria, they are governed by law. There are 5 of them, but we'll just narrow it down to PENCOM and pensions. Before 2004, now there was this defined benefit scheme whereby the total pension obligation is borne by the employer. That one was characterized by inefficiency, lack of transparency, and thereon, and federal government thought it wise to enact this contributory pension by June 2004, which was reformed in 2014. Now, the reason for the reform is for it to be more robust and take care of small organization or employees that have maybe 3, not up to 5 employers.
Yeah.
Now, the issue of pension,
Yeah.
someone was defining pension and then lump sum and that.
Yeah.
The contributory pension by law requires that the employer contributes a minimum of 10% of the employee's salary, while the employee also contributes a minimum of 8%. So making a total of 18% to be remitted to the PFA. Now, this sum over the years, okay, now let me bring up some constraints that do happen in getting this pension payment. Because before 2004, there are accrued rights that need to be sent into the PFA account, the employee's account with their various PFAs. This sum over the years on retirement and obtaining this amount is not only when you are 35 or 60. The law says 50 years of age, you are entitled. Below is 25%. So your total contribution over the period when you are 50 years of age and above, or you show evidence that you cannot be employed gainfully any longer, maybe by accident or any other incident that may happen, one is entitled to 50%. That the first 50% is the lump sum that will be paid to you by your PFA. The other half of it is where we now talk about annuity or program withdrawal. Now, the difference between the two, the program withdrawal is also a scheme that provides monthly pension, monthly or quarterly. Also, annuity does that.
Okay.
But the monthly or quarterly pension of program withdrawal is based on a calculated expectancy life of the employee.
Okay, I'm sorry to cut you, Mr. Sylvester. Please don't be offended. But I'm cutting you because I wanted you to give me like highlights of why it's important that these people get, because Mrs. Yesterday has already given us this explanation, you know, Mr. Larry has given us, and you've done a great work giving us the history as well, which I think we should know. It's important that we know. But right now, I want, like, from the experiences that you've had with people, maybe you've had any real life experience of people that did not get annuity when they were supposed to get it rather, the disadvantages it caused them. What are the pros of getting it? Why you think people should actually get annuity plans? So I just want those highlights.
For retirement,
please.
there are only basically two. Is either program withdrawal or annuity. But the advantage for annuity is that, you see, when one works for this period of time, you are now accustomed to a livable amount, and the annuity is computed based on your last earning. That is, it should take care of your basic, your transport, and your housing. Now, the value you get very slightly depending on the insurance company, how robust they are. But for annuity, is for life. It's and also guaranteed for 10 years. This guarantee, where people miss it sometimes, when this is guaranteed for 10 years, is so that if one dies before the 10 years, the balance of the 10 years is paid to the beneficiary, and it does not require a letter from probate. It's a straightforward contract. Even the percentage of the amount to be allocated to each of your beneficiary is stated in your contract form. Unlike program withdrawal, which is more complex. You need a letter of probate, you need reliable means of identification, and even the risk. The insurance company bears your risk of longevity. Whereas on the other one, the retiree bears the risk of longevity. The issue, your funds, you don't need to go for annuity, since it is already computed according to what you were earning before. Livable wage. The program withdrawal will now be subject to if your investment to be in fund 1, fund 2, fund 3 to fund 4. And if you have the age of 60 or retirement age, you are definitely going to be in fund 4. So to avoid this complexity and to get a reliable source of income, annuity is the way.
Is the way. I think that's the best way to end this. That punchline is going to sink deep. Annuity is the way to avoid all of that. Thank you so much. Thank you so much, Mr. Sylvester. And still talking about annuity, that's the reason why we're here, decoding the perks of annuity plans for a simple future. And Coronation is very, very important. They're very, very interested in people living a very good life, people having peace of mind, retiring the right way. So I want us to give thumbs up to Coronation once again for putting this together. We're giving thumbs up to Coronation Insurance Limited for putting this together. So I'd like to ask Mr. Wemimo. Mr. Wemimo, do we have you here? Are you still with us? You know, you're in the best position to answer this next question because you are the team lead for Annuity Sales Coronation Life Assurance Limited. And this question is for you. Now that we've gotten this knowledge of annuity, the difference between pension and annuity, why it is very dangerous if you decide that you don't even want annuity at all. And with everything that everyone has said, I want you to give us an insight of the products that Coronation Life Assurance Limited has and how you have delicately created these products to suit the needs of individuals and the different products that you have, basically, so that people that are here in the webinar can get insights and know what to do when they want to approach Coronation Life Assurance Limited.
Okay. Thank you. I want to say I've really, enjoyed this conversation from Mr. Ajibola. Okay, so I'd like to put clarity about annuity first. Annuity is a pension scheme. Annuity is a pension scheme. So now, in Pension Act, we have what we call Pension Act 2014. Annuity has been embedded in Nigerian pension scheme. Annuity is there. So it's one of the options for retirement. After you have worked, like what Mr. Ajibala said, after working for 35 years or thereafter, then you have two options. It's that you go with program withdrawal or you go with annuity. Unlike what people felt like the only option to pension is program withdrawal, which is totally wrong. We have two types of pension retirement. The first one is program withdrawal, and the second one is the annuity option. Now, for us, basically, annuity is the only recognized system that has the power to pay you for life. And if you check the Nigerian Pension Act 2014, you find in there that annuity has the capacity of paying you throughout your life, your lifespan. So
Yeah.
unlike the other, yeah. So
Yeah.
it makes it more, more useful to retirees. So one of the
Okay.
options that yeah. So
Let's
one of
get
the
to
things
Coronation Life Assurance, the products that
for
you
Coronation
offer.
Life,
Yes.
so we
And
have
how
what
you
we call
design the products to
so
meet the needs
so
of.
we have a product that's called Annuity, which is designed for our clients to enjoy retirement. And one of the things we do is to give them a very good income, which is more than what they were earning when they're in pension. So if you are joining the annuity, if you are joining our annuity plan, you have the opportunity to earn higher income, and there is a sure guarantee that you are going to be paid for life. So we have that system, and we have other things that we do to support you so that you enjoy your retirement. So that we have in Coronation. Thank you.
So can you, are those the products that you offer only, or do you want to list the
Yes.
products?
Yes, we have other products, but in regards to annuity, we have a separate product for annuity. We call it annuity. We have a deferred annuity, and we have PRA, pension regulated annuity. Yes, those are products that we design majorly for retirees, for annuitants. Yeah.
Okay. There's one thing that most of the speakers, Mr. Sylvester spoke on, Mr. Larry as well, that's program withdrawal and retirement annuities. So I want to ask you this question, Mr. Wemimo. Can a retiree on program withdrawal, that's PW, switch to retirement annuities as we expected? Some people might want to switch after this webinar.
Yes. So the Constitution allows somebody, a client on program withdrawal after 12 calendar months, that's after a year you have been on program withdrawal, you can as well switch to annuity. But you can't switch from annuity back to program withdrawal. So if you retire immediately, you can make your options. But if you have opted for program withdrawal, you have to wait for 12 calendar months, that is a year, before you can switch to annuity. And coming to annuity, gives you more advantage of getting a higher income than whatever you are earning on program withdrawal. Thank you.
Thank you very much for that, Mr. Wemimo. Okay, so Mrs. Yesterday, are you still with us? Yes,
Yes, I am.
So I want us to address some misconceptions. I've had like a brief chat with some people as regards annuity, and there's this thing that people think about when they hear annuity. So I want us to talk about that. Let me list some. Some might amaze you. I'm sure that you must have heard of some before. And then there's one, they say, oh, if the market drops, it will bounce back. Have you heard it before?
If the market drops, the annuity will bounce
like
back.
it will bounce back. Or if they die, the money will die with them.
Okay.
If they die, they'll not be able to get the money back. It goes. And then another one is inflation will always outweigh their returns. So if they're expecting a particular return and then there is inflation, it's going to affect the returns. So I've listed like 3 now. Should I go on?
Let me, yeah, how many more? So maybe I'll take it one.
Okay, I have like 2 more.
Okay.
2 more. The assurance company makes all the money and I don't.
Okay. Okay.
Because when you give you the amount of money and say, oh, I want to buy this
Mm.
annuity, at the end of the day, say, oh, they're making so much money. I'm not making a lot of money. They're using me for
Okay.
business.
Okay.
Yeah. So I want us to address, let's just stop there. And that
Okay.
last one will be tentative.
Okay. So let me see. I don't understand if it drops, it will bounce back once. So I'm gonna pass on that one. When you die, the money will die with them. Okay. So let's think. So I think what we need to do is think about the annuity, and in this case, I'm going to keep it on the PRA annuity.
Yeah.
What it is the PRA annuity says the insurance company must guarantee to pay you for 10 years. Okay. So even if you die in the first 10 years, the insurance company will continue to pay. Or, as Mr. Sylvester pointed out, all you need to do is tell them the person has passed on and they will pay you a lump sum equivalent to the payment they would have paid over the next 10 years. They will give it to you in one go. So it's not a case of if you pass, you will die there. But if you happen to live past 10 years, so if you happen to live, and I think it's important that we're clear so that this webinar is actually educational. If the person lives till the 11th year, for example, if they pass on in the 11th year, the payments will stop because they have exceeded the 10-year guarantee. Okay, so that's, oops, sorry. Let's see if you have some light. Okay, I'll still go on while I'm dark, but let me see what I can do about that. This is
Gladly, we can still see you. I think
you can
should
still
go.
see me.
Yes, because
Fantastic.
the background is orange, so we can see you.
Thank you. So the next one is inflation will outweigh their returns. Now, when you take out your annuity with your insurance company, you fix your amount. You say, oh, I'm going to get paid 100,000 a month, or I'm going to get paid 2 million a year, or whatever it is you agree with the insurance company. Inflation or no inflation, that's what you've agreed. And the insurance company will continue to pay you that amount, irrespective of what inflation is. So if the market, if it goes down and everybody is not making any money, the insurance company cannot come and tell you that the market has gone down. That's not the insurance company's problem. That is theirs to carry on doing. So the next one is insurance company makes all the money, you don't. Now, when you buy an annuity, like we've said, the insurance company has said from day one that they have they're going to continue paying you an amount. This is super important that you pick the right insurance company when you're doing this, because across the world, in Nigeria, they only see what it's only what they see, they know. Annuities are so very risky for an insurance company, because I have taken my money in day one. I will pay somebody for the remaining 20, 30 years, and I cannot ask him for extra money. So if anything happens, I continue to pay. And insurance companies have actually had issues with that in other parts of the world, where they have made promises and it's almost sunk them. So insurance companies, so when you say insurance companies making all the money, I don't know, this annuity business can sink insurance companies. So we are always very, very careful. That's why you find out that insurance companies have actuaries, insurance companies are talking about investments, because if I recall, I don't know if this is a myth, one of the earlier people who did an annuity told this lady that, don't worry, bring your house. I will continue to pay you until you die, expecting the 80-year-old woman to die in the next 5 years. The woman lived to 100. The guy was like, man, I didn't realize I was going to be paying money for another 20 years. So think about it. We're all making projections about how long the person is going to live, and it's never really clear that we're going to achieve that. So I think I've answered all the ones you've put out.
Yes, you have. I even have a follow-up question, but I would like somebody else to answer. Thank you for even giving us more insight. Thank you so much. Mr. Larry, is your camera good now? Because I have a question for you.
Yes.
I was told that your camera is fine. Good. Finally, we can see Mr. Larry.
Yeah, it's good to.
Okay. So welcome again. Welcome.
Thank you.
Welcome. All right. So I want to give you a follow-up question. I have a follow-up question following up from what Mrs. Yaside just spoke about. You know, people are scared. They said, oh, the insurance company makes all the money where I don't. So in your opinion, what do you think are the values that anybody should look out for in an insurance company before buying an annuity plan from them? What value should they have apart from their payout options?
Yeah, thank you for that. I think what is very clear from all the preceding discussion in annuity is it's a long-term contracts or decision or an arrangement. So you need to consider how strong the insurance company is financially. So that is one of the key factor you need to consider. How strong is the insurance company in terms of its finances? This you can get from its annual reports, and see how how strong that company has been. Of course, also you can look at it to see how long has the company been in town, and have they performed well in their in meeting their business obligations. So basically, I would say those are the key reasons, key factors you should consider. Also consider the resources available to the company, because you can't give what you don't have, really. So I would say those are the main factors we should consider when deciding which company to go for. Okay.
All right, thank you so much, Mr. Larry, for that clarity. I would like to ask Mr. Wemimo this. Mr. Wemimo, are you here? Retirement annuities, are they suitable for a certain demographic or anyone can purchase them?
No. Basically, well, for 50 years upward, yeah.
50 years
Yes,
upwards.
for 50 years.
Any kind of, do they have to have been employed in a particular industry? Do they need to have like a certain kind of job, or it's just for any kind of retiree?
Okay, so we have like three types of annuity. The first one is PRA annuity, pension income regulator annuity. For that, for you to qualify for that, you have to have a professional job. So after retirement, then you can actually do annuity. Then if you want to do deferred or immediate annuity, anyone can pick that. Anyone can pick that. But for PRA annuity, you have to have a professional job before you can pick that policy.
Mr. Adebole, are you still with us? I saw you smiling at some point when I was listing the popular misconceptions people have about annuity plans in Nigeria. Are you still with us, sir?
I'm with you, Victory.
Okay.
Yes,
Do you want to add anything? Just
Yeah.
to clarify some things.
Yeah, I think yesterday has covered most of the misconceptions that you raised.
Yeah.
I think the key one that you mentioned was that insurance companies will take their money away. And I think it's clear that the retirement annuities that are sold in Nigeria, including the one that we sell at Coronation Life, has a guaranteed period. And the way they are priced also, the bulk of the money, bulk of the lump sum is usually gotten within the 10-year period already. So in that sense of it, you're covered. You're sure that if anything happens within the first 10 years of the contract, you get the bulk of what you've given to the insurance company back. But again, there's also the risk that you'll be for extremely long, and which is what you're covered. You're covered. Which is what is covered under by the time you buy annuities. What it means is that if you decide, or you've got grants you long life, and you decide to live to 200 years, you're sure that forever your money won't finish. You keep on collecting money. So that's the upside of annuities, which I think is people purchasing annuities should be aware of. and should help them in making decisions around purchasing annuities. Thank you.
Thank you very much, Mr. Adibowale. So I am going to give everyone of our panelists the floor to give their final remarks as regards annuity, just like a charge, so that people that join this webinar today have something that keeps ringing in their head, like, oh, Ms. Yesterday said this, Mr. Wemo said this. So I want us to give like a 30 seconds, 60 seconds charge of final remarks to our participants. Let's start with Mrs. Yesterday.
Hello, Victory. Sorry, I just wanted to say before I do the final charge, there's some questions in the Q&A just to make sure that we've kind of picked those up.
Okay.
I think.
Yeah, the second one is a comment, actually, not a question. And the first one, I saw that you already circled back. So that was why I didn't take that. But I'm anonymous attendee. Please, would you, okay. But if you want to go back to this again, Mrs. Yesterday, I think you can.
No, I think I just wanted to make sure that we had talked about all the we had answered all the questions. I think the main thing from me, or the final charge from me, is do your research, understand how much money you want, and know your risk appetite. If you have no savings to fall back on, don't go and expect. And risk appetite means know that if things are good, you're good. If things are bad, who are you going to rely on? So know where your risk appetite is in picking things and deciding what you do, and make sure you have the right amount, thought about it, and plan early. Start early. Don't wait till you're 50 to plan for retirement.
Yeah.
Start in your 20s. Put 2,000 naira, 3,000 naira, 5,000 naira, whatever it is, put it aside. It helps.
I think this charge is for me as well. So people like me that would think that, oh, we need to get to 50 years old before we start thinking of annuity. We need to change our mindset. They said we can start with 3,000, 5,000, even 1,000 naira. Nothing is too small to secure your future. So yes, thank you so much, Mrs. Yeside, for that. Thank you. Mr. Wemimo, you're up next. Your final charge, remarks.
I think my final charge is Coronation Life Assurance. We are one of the leading annuity provider in Nigeria. I want everybody to to come to us, and we have the best payout income now, present as I'm talking to you, and we assure you that we are going to pay you for life. Thank you.
Good. Yes, fantastic. Coronation, they can be trusted. They are tested and trusted. Coronation Life Assurance, tested and trusted. Make sure that you get your annuity products from Coronation Life Assurance Limited. Where else? Where else? And if they're not so concerned about you, we will not be having this webinar today. So please invest in the right place. Get your products in the right place. And from everything that Mrs. Yeside has said, put that to action so that you do not make the wrong investments. All right. Who do we have up next, please? Thank you, Mr. Wemimo. Mr. Sylvester, please, your final words, your final charge.
As I said earlier, annuity or insurance companies are regulated by NICOM and also supervised by PENCOM. So there are two supervisory bodies overlooking this your investment. So you could be rest assured. Two, I said, annuity is a guaranteed payment for 10 years. And because we have shortage of time, I will have taken you through the process before that value is being determined. Three, the insurance company bears the risk of your longevity. You can be rest assured that this is the best way to go, because there is guarantee, double supervisory bodies, NICOM and PENCOM, and the value being paid is computed based on your earnings, not based on your expectancy life as against program withdrawal. Thank you.
Thank you very much. That was powerful. Thank you so much. All right, Mr. Larry, your final words, final charge.
Yeah, I think I'll just come in to say, one of the distinguishing feature of life annuity is the fact that it pays income until death. And that might seem very simple, but it's actually very important because, you might think, death will call in the next few years or so, but then you could still be around, till 100 or thereabouts. So that is one important feature of life annuity. It pays until death comes calling. Thank you.
Yes. All right. Thank you so much, Mr. Larry. I think that's all from all our speakers. Yes, that's all from all our
Are you
speakers.
sure? Victoria, this bounce back, I forgot to talk about that bounce back you mentioned. The misgivings about people about bounce back.
Okay, yeah.
Bounce back to people mean they are afraid because most people are not financially literate to understand issues about market. The program withdraw, the funds kept will either be invested in Fund 1, Fund 2, Fund 3, Fund 4. And these funds have different characteristics which need to be monitored. And their returns also, they are based on the economy of the country. So for that bounce back thing, it's more for program withdrawal retirees. But for annuity,
Not for
it is
annuity.
guaranteed and assured. Governed by two people. Program withdrawal is only monitored by PENCOM.
Thank you so much for that clarification, sir. Thank you. Thank you. Thank you. All right. I hope this has been insightful. If it has been insightful, ladies and gentlemen, I want to see your comments in the comment section. That's the chat box. Thank you so much. I hope that we have learned a lot. I want to see your comments in the chat box saying that, yes, this was very insightful. If it was insightful, give us thumbs up. Let me know if it was very insightful. Yes, I'll be waiting for that while we take our closing remarks by Mrs. Olufumi Adenipekun. What is the special act Coronation Assurance gives to clients or retirees?
Okay.
Yeah.
So,
Okay. You want to take that? Let me take that. All right. Thank you, Mr. Sylvester. So I think the first thing you get with us is I don't know if that's what you mean by heart, but it's the fact that as a business, if you're transacting with Coronation Life, you're transacting with a very secured business. I like the question that was posed to Mr. Jagulano about the insurance companies that you should actually look out for if you want to purchase your annuities. I mean, you are basically putting your life savings into an investment to get money for the rest of your life, which means that if you're taking that decision, it's not a small decision, it's a big decision that must come with proper thinking before you take that kind of decision. So for us, the first thing is the fact that we are a business that has been around for a very long time. But apart from that, in terms of our security, in terms of financial strength, we're one of the strongest businesses within the industry in Nigeria. Our numbers speak for themselves. So in that sense, you are guaranteed and you are assured that you're actually dealing with a company where your money is secured. The next thing is the fact that our rates are extremely competitive. We have access to deep investment assets and we consider this one of our unique offerings in terms of how we are able to match what we're paying you, and we're able to give you one of the best of rates in the market. I think Wemimo spoke to that in terms of how we price and the fact that our rates are extremely competitive. So you are assured that by coming to Coronation, you're getting enough and more than enough in terms of what you could have gotten from any other insurance company in Nigeria. Maybe I should just also add again that when you're making a decision about annuities, for our listeners that are close to retirement and that we're making these decisions, be careful not to be swayed just by a lot of niceties that a lot of companies would offer you. Be sure that you consider the fundamentals of the business, some of which we've mentioned on the call today, before you make that decision. It will help you, but also ensure that you're not taking a wrong decision as regards your life savings. Thank you.
So much. Thank you so much, Mr. Adebo. We have more questions. Yeah. Okay, so this person, Atumor Francis, says, I had never heard this all my life. How do I go about it? I have 3 years and I've been saving on my own with a cooperative. Can I invest in my last collection total as annuity at once? I think the question is, can he like withdraw all the money that he has been saving, right, from that cooperative and invest in annuity at once? Please, who would like to take that question?
Yes, it can. Yes, it can. So it's going to use that investment for his retirement plan. So it's very simple. So that's what it's going to do with the fund. Instead of investing with the cooperative, you can just use that same fund to invest into an annuity, which will guarantee you, a long time on life savings.
Now, let me add to that. By law, any organization that has 3 employees must register with the PFA. So they should be doing contributions. And also, you are allowed to do additional contribution, which what she is talking can come under it. So that she will have a more robust lump sum for investment or annuity at the end of her retirement. Because contributing in pension fund make provision for additional contribution, so she can take advantage of that. That's the answer.
Yes, fantastic. Yes, thank you for that clarification. All right, so this next question says, it's by Yinka. During the contribution period, if the customer is unable to continue with his payments, what happens to the annuity plan? I think this is not about Coronation. This is like general. I think it's coming from Mrs. Yesterday's comments where it said you can start paying now, even in your 20s. You can start making payments towards your annuity. And do you want to answer that, Mrs. Yesterday?
Okay, I'll pick that up, Victory. So I think what I'm saying here is when you're working, you're actually saving towards your retirement. Whether you go down the program withdrawal or you go down the annuity route, you make that decision at retirement. But in order for you to have a good lump sum that allows you to make a good decision for yourself at retirement, you need to start saving now. And as Mr. Sylvester has just said, if you are an employee to a company, by law, you should be set up with a retirement savings account. Your company should be deducting some of your salary to go into that, but you can also make an additional voluntary contribution into that pot again to increase the amount. Note also, when you do all the savings, it's tax-free. So there's no tax. So these savings are taken before tax. So it means that the tax, instead of you paying the government tax, you're paying it into your own savings account, which is another way in which your savings grow. Because so I think the moral of it is, while you're working, look at how you are saving. When you get to retirement, then you have to make a decision on whether you go program withdrawal or whether you go an annuity. And we've had all the conversations around annuity have been talked about enormously today. So I won't belabor that again.
Okay, thank you so much, Mrs. Yeside. Do you require a medical review or certificates to participate in annuity? Who would like to answer that, please? Do you require a medical review? Mr. Adebowale, please, can you help us with this question? Do you require a medical review or certificate to participate in annuity?
Okay, the simple answer is no. You don't require a medical certificate for annuities. This is not a it's not a death benefit contract in that sense of it. What we're covering is, of course, for you to live longer and we keep on paying you. So when you start off the contract, we don't require all of that from you.
Okay. Thank you very much. And I think this will be the last question by TD John. How do I know my total accruable resources I supposed to collect from PFA before I start talking about annuity? So how do I know my total accruable resources I am supposed to collect from my PFA before I start talking about annuity? Mr. Adebola, do you want to say anything? Or
Can I
All right.
comment?
Mr. Larry? Where's Mr. Larry? Are you still with us?
All right, let me help. Okay,
Yeah,
Larry is on the
I'm
call.
staying here.
Okay,
Okay.
Mr. Larry, do you want to say something about this question?
Okay. So basically, you can have, say, say an accurate figure, but then you can make some projections. And I think some PFAs on their website will give you some projections to say if your monthly contribution to the RSA is such an amount, and then based on the return on their assets, historical returns, they can then look at your age and your retirement age and look at the future contributions for you to make and the balance you have as at now. Then they can give you some projection as to what will be the balance at the end of your retirement age, which can then be used to buy an annuity. Thank you.
That's very concise and very understandable. Thank you very much, Mr. Larry. Mr.
Victoria.
Adebola, do you want to say anything else? I'm sorry I cut you there on.
No, it's fine. I think Larry has already, Mr. Jaglan already answered that question very well. But the other part of it is that if you are at retirement, actually at retirement also, you will have your balance. You can get your balance from your PFA. All of that computation would also be done by your PFA to show you exactly how much you have and how much you qualify that qualifies to be used to purchase an annuity from, of course, your annuity provider.
Thank you so much for staying tuned and attentive to this webinar. So we'd like to take our closing remarks now from Mrs. Olufumi Adenipekun.
All right, thank you, Victory. Ladies and gentlemen, you quite agree with me that this session has been informative. And while we're bringing it to a close, we want to extend our heartfelt thanks to everyone on this call for their participation today. It's a great privilege to have you with us, and we look forward to navigating your retirement periods with you, while we also want to see you at our future events. We are honored to have our distinguished speakers, Yeside, Sylvester, Lanre, and Wemimo, providing invaluable perspectives and practical advices on how we can navigate the complexities of retirement planning, while also exuding confidence and emphasizing the critical roles of annuity plans in securing a stable and comfortable retirement. Special thanks to Victory for expertly moderating the session. And as we conclude, I encourage you to reflect on every insight we've shared and consider how you can apply that to your personal retirement strategy. At Coronation Life Assurance, we are committed to supporting you every step of the way, ensuring your financial future is secure and is prosperous. If you have any further questions or need personalized advice, please do not hesitate to reach out to any of our team, and we are here to help you make informed decisions that will benefit you and your loved ones. Thank you once again for joining us. Have a great day. I am Fumi Adenipekun, the Chief Risk Officer of Coronation Life Assurance Limited. Thank you. And remember, no amount is too small. You can start saving towards your annuity from now. Thank you, Victory. Over to you.
Thank you so much, Mrs. Olufumi. Thank you. And on that note, no amount is too small. Start saving for your annuity. Thank you so much. I can see all the comments here. It means that this session has been enlightening. Thank you very much for the enlightening. I can go on and on and on. Thank you so much, everyone. To our panelists, thank you so much for sharing your insights, your knowledge. Thank you for educating people. Thank you for your time. We really appreciate you. And to Coronation Life Assurance Limited, thank you for putting this together. This has been amazing. I am so excited that I was part of this. I've learned so much. Very informative, very insightful. And like Mrs. Olufumi said, no amount is too small. I will start saving now. because I want to have peace of mind. Don't forget that you can watch the full version of this conversation on the YouTube channel at coronation_ng. So make sure you head on to YouTube, coronation_ng, so that you can watch the full version of this webinar. My name is Victory Wilson, a broadcast journalist and event compere, and it's been such a pleasure piloting this webinar. I look forward to seeing everyone some other time again. Thank you and have a wonderful, wonderful day.